Good day all. Ira Epstein of Linn and Associates with your metals market wrap-up, and this is for Tuesday, and we are now at the 17th of December, 2019, just on the 4:15 in the afternoon. I want to thank so many of you that have written to me on the ETFs that you want me to cover, and being metals, I'm getting a bunch of metal ones you want, but I'm going to do one ETF subscriber video. It will come out after the close of business, ideally, because that's when ETFs close. They don't reopen to the morning, so I don't have to race at it, and it's going to be, I think, a lot of fun. Remember, it'll be a paid subscriber video. It will not be free, my friends. That'll be just like I do the morning one. So I'll be saying buy here, sell there, and things of that nature. As you can see, the gold was up a little today, silver giving back some of the gain it made on it, copper pretty much unchanged. I thought today would be a Tuesday reversal day, as I mentioned that yesterday, and I was half right, okay? Two of the stock indices were up, two were down. But the reality is the market had trouble holding on to gains. We're seeing today how it's playing out in the House of Representatives as they're getting ready for tomorrow's full vote on the impeachment of President Trump. The USMCA deal they've announced will be voted on Thursday in the House. I expect that to get speedy passage, go right to the Senate and to the President. Those are positive things. And sometime in January, you know, we'll find out just what the impeachment trial is going to look like. Will there be witnesses? We don't know any of that yet, so don't read more into it than you can. The other thing that I want to remind you, this is the last full week of trading, and I'm already seeing the markets acting like holiday markets, so beware of that. Trade appropriately to that. Now, you decide what that is. In my mind, I already know what it is, and I tell my subscribers how to handle that. Energy prices up, USMCA deal, good news. We're going to get details within weeks, days. And I'm not talking a lot of weeks as to what the US-Chinese deal looks like. Grains again up on that. As we go to the gold chart, we can see that we've been drifting around for the week. The market is down $1. I wish I could say it was up $1 if you're bullish, but if you're bearish, you're happy it's down $1. The bias remains still to the downside. Now, what do I mean by bias? I define bias as the relationship of price to a key moving average. Now, in my case, I use the 18-week moving average of closes on a weekly chart. And that's what I determine bias from. The reason I'm showing you the chart of closes is it gives you an idea where that bias is and how the market shifts around on it. So far, recently, if you go back to even the April period, you had a down momentum, but it didn't go very far under that number, and it's acting similar again. That does not mean that the market's going up, but just similarities that I'm seeing in the market. As we come to a daily bar chart with no studies at all on it for the February gold, it's hard to argue that we haven't just been drifting sideways for a very long time. The 1454, 55 area bottom, the 1490 area, the resistance point. The market has got, when I put the swing line on it, a pattern that you can see of higher lows, and it's had higher highs, and that's still in place. That can change if the market were to break under 1465.50. That would be bearish if the market didn't first get over 1491.60. So I see where the resistance area is in that 1490 zone. The, if you will, neutral number is the 18-day average of closes at 1472.80. But at this point, the way I look at the market, you have higher lows, you have higher highs. The bias on the daily chart is up since you're over the 18-day average, and the risk to the longs would be to get under 1465.50. It would break this bullish pattern. When I look at the resistance, it's staring you in the face. It's 1487. Even the 45-50-day average, that got up right to today's highs, and today's high was 1484.90, and that held the market. But what we've got now is price. Think of this as a pipe, the black dashed lines. Those are the Bollinger Bands. Resistance, top line, bottom line support, but going sideways, which means it's like price is a spring. It's winding up inside of there. And when you get this sideways action, the problem is you often get whipped as the market tries to break out one way. It might try to break out to the downside, and often it gets little follow through. So that's the thing you remember. The seasonals next week turn bullish for the gold market. That does not mean seasonals always work. If they did, it'd be phenomenal, but I'm just giving you what that is. Momentum is not overbought. It is still pointing up, so we have a market that is in an uptrend as the swing line's pointing up. The bias is up, momentum up, and resistance right above the market, about $6 higher at the 1487 level. When we come to the GLD ETF, we have the pattern of higher lows, higher highs. The market's sort of stalling. In fact, the negative today is if we look at today's range of 139.30 is the high. If I go to yesterday, the high was 139.39 and the low 138.80. Today's low 138.86. The reality is that that gives you a pause because you've got lower high, higher lows. However, you get bullish again if you can take out yesterday's high of 139.39. But for those that want to jump on this, the problem is 139.62, the upper Bollinger Band's 24 cents above that. So I'm still going to give the benefit of the doubt for the moment to the bull. You still got momentum up. Are we overbought? No, we are. We're at 71. So that's problematic. In fact, if you were to take out 137.98 and not get through that 139.79 level, you could end up with lower highs, lower lows. So the bulls have to do their work right here, right now to drive prices higher. And unfortunately, they're already in an overbought status. In the gold-silver ratio, you're stuck at the 18-day average of close. In other words, you're pretty neutral on it right here. When we come to the GDX, first I'll go to the full-size one, and you can see the difference. I've got some colors changed there for you. But lower highs, lower lows. Now, we were talking that if this market fell, maybe support would come in at the 18-day average. You're overbought in the market, correcting to the downside. The market's out of the overbought condition. So it got back to neutral. It did not turn bearish because the market is still trying to stay over that 18-day average, but just by the hair of its chinny chin chin. If it lets go much there, could the 2631 Bollinger Band come into play? When we come to the juniors, we've got lower highs, lower lows. Instead of the 18-day average acting as the support, we first ran into the 100-day average. Now, this market didn't really pay a lot of attention to this on the way up. But on the way down, as I mentioned, it's often the case that even though a moving average may not offer one layer of, let's call it resistance, if you just slice through it and you come back to it, it's often a support zone, just the way that it seems to work. The silver market is really pretty neutral to bullish. It's got the higher lows. You can see that. Now, today's high was 1717, just over that high, so I can call it a higher high. It did manage to close higher over the 18-day average, but my mentality is already that I think the market's thinking holidays. If it takes out the 1689.5, you end up with a, let's see, that would give you lower highs, lower low. That would put you back into challenging down here, the 1660 level, 1662 to be specific. So the bulls have to make this market hold on here. Taking that number out for me would be problematic as a chartist. In the copper market, as you can see, the embedded reading is at work. Embedded means the market converts the two numbers that make up the slow stochastic, where both numbers are staying over 80 at least 3 days in a row. When that happens until the red line closes back under the 80 level, you're looking for buying to show up on breaks in the market. And so far, that seems to be what is going on. Excuse me, as long as it stays like that, I'm friendly. In the platinum market, we're into a corrective mode. So what happened is, coming into today, you had the pattern of higher lows and a higher high. You had an inside day on Monday. If you take out the low of Friday, you end up with this pattern of lower highs, lower lows. So you're out of the uptrend on the swing line. Yes, the bias is up because you're over the 18-day average. Momentum is in a correction mode, and it got back today under the 70 level. If you take a look yesterday, the numbers were 70 and 71.62. So today it's correcting. But because it lost the swing line that was up, you're into a neutral chart. You're attempting a correction in the Palladium with an outside day down. You could call this a key reversal day. Traders will give it all kinds of names. The reason it's key and not just an outside day, it's the highest high of the whole move. You closed lower and took out the previous day's low. And some people even look at the opening of the market and they want the market to be under wherever it opened. So you did all those things. Does that mean the market's suddenly bearish? No, but it's a warning sign that you suddenly run into resistance, and until you can clear that high, don't know where you go. And by the way, even if you clear that high, here's my problem. I don't know what's above the market. The Bollinger Band would be below it. All my key moving averages are under the market. Gets to be a problem. Dollar index, still bearish. The swing line is still lower highs, lower lows. The dilemma with the dollar being bearish is this: you're oversold. So you have a market that's oversold. You're going into the impeachment vote tomorrow in the House of Representatives. You're going into the USMCA. And then after that, you've got Christmas, which is a worldwide holiday. So we got to think that through. I put it all together, try to come up with a game plan, and one of the things that I do is I do look like this morning. When I woke up, I was showing traders how to use pivot points in the sugar market. Now you'll say, what's Ira talking about sugar when he's doing a gold review? A chart's a chart. Take the name off the chart. You're just looking at where the pivot's coming in. And what traders try to do intraday, especially during these quieter periods, they're looking for a neutral number and then resistance points above the market and support points below to be more in and out in their trading. And the reason is the holiday. Do they want to carry positions? And or, let's go to the other side. You come into the market with a position. It's not near the Bollinger Band, but you see you're oversold or you see that you're overbought. Maybe use the pivot point to figure out, hey, I don't know if I'm going to get to that Bollinger Band to come out. Maybe between the window envelopes, another study that's in my charting course, and using these pivot points, I can come up with another number. I actually use it that way. So when I'm looking at the market, some traders will say, Ira, where'd you come up with the number? I'm giving you what I'm looking at. I'm looking at a series of variables and just trying to come up with a number for them based on momentum, based on the study, based on where we're at in the year, a whole number of different things. How do you get this free 3 video series? It's really simple. Go to our website. You'll see free offers on the bottom right. Click it. You'll see this in there. You can click up here if you're watching me on YouTube. And don't tell anybody, but the old-fashioned way, you can call us, and my staff will get it out to you in about a minute or two. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.